Good morning. And welcome to Trading with Larry. It's Larry Benedict, joined by Eric Shamalov, coming to you live this morning as the market gets ready for what we've talked about, and we have a product around it called quad witching. Quad witching in full effect today. Yesterday, we'll get to the Fed, but really today's market action is pretty much easily explainable by the fact of tomorrow morning at 9:30 there's simultaneous expirations of futures options and stock options, etc. So they are going to cash this thing out and be done. And what that means is September, if you're trading September futures right now, or you have options going out, they all go out tomorrow morning. So if you have SPX, you could trade AM or PN. If you're trading the AM expiration, you're cashing out. So this is a big cash out number. And it's interesting. It kind of came out of the gate. Like the market was very choppy yesterday. The SPU actually traded negatively hard off of the Fed and off of him speaking, which was literally. It's funny. Unfortunately a Dolphin fan, and the Dolphin head coach is a guy named Mike McDaniel, and right now, that guy is on tilt, and when he's talking, you can't even make clarity out of what he's saying. And I thought that Powell yesterday did an absolutely horrendous job of of really putting his point across, what he was talking about, whether there's going to be another move. He used exact words that I said he would use, that he's completely data dependent and every meeting is independent. But right out of the gate last night, at after 4 o'clock rang, the S&P futures ran $30 right out at $25 right out of the gate. So this is part of the cash out. Um, I'm actually feeling pretty good that tomorrow may be the high of the entire year. Whatever that price is tomorrow. It's so contrived. Everyone cashes out. So I'm looking for that. But that's really, if you join the opportunistic trader, we have a product that basically trades this, and it's once a quarter. It's a beautiful trade. It's worked out great for us over the years. And again, it's setting up, as we speak. I mean, somehow the S&P is up 50 handles today. On what? On the fact that the Fed didn't really do what they said they were going to do, or put clarity behind anything. It's disturbing. There's a lot of crazy things. Like I was looking at Nvidia. Nvidia is up $5 today because they made an investment in Intel. You know how many people have made an investment in Intel, including the U.S. government? Like a zillion people. This stock, every time it hits news that China isn't buying their chips, some fake stuff comes along and rips the stock right back up, and it's kind of bizarre action. But anyway, that stock's up a lot off a small investment. I want to throw it to you in a minute to talk about the Fed, because the Fed, eh, for me, it was shocking. He was asked a question about inflation. He kind of looked clueless, and she said, "Well, inflation is running well above your target at three to 3.2%. Your target's 2. Are you abandoning the target?" And it was like a deer in headlights. Like he wasn't answering, and you know, it was really kind of disturbing to watch. And we actually had a long position yesterday. And we were a little bit nervous down there because it looked like they were going to go down 100 handles. But since that point, we've gone back up 50 handles and another 50. So rather than go down 100 handles, we rallied 100 handles off the low. But really, there's massive amount of money at play here. So just keep an eye on it. It'll be interesting to look, but I'll throw it to you. You can talk about your thoughts about the Fed, and then anything else you want to, take us down the path of.
Yeah, I'm very surprised. I came into the Fed meeting thinking we were going to get clarity, and we got the opposite of that. So you got that right. I got that wrong.
No way. I'm taping that. Hold on. I got to
You
tape
got that right. I got that wrong. I thought for once we're going to get clarity from the Fed. We got the exact opposite. I mean, you look at the dot plot, massive confusion within the dot plot. There's like obviously Trump's new guy in there. He thinks we should have like 5,000 basis point rate cut, negative rate interest rate. Then you have
it.
people actually pricing in rate hikes for next year from the Fed, and a bunch of people kind of in a mainstream position, and it's a little confusing. He looks confused, obviously, but one takeaway that I got was there's a massive concern about jobs, massive concern, and we just had a jobless claims number come out a few minutes ago, which was in line, but um, I could pull up a chart in a little bit, but initial jobless claims are basically at I would say a 3-year high right now, and it's interesting that it comes right as they're, from what it looks like to me, this is the jobless claims number here that you're seeing on the screen. Uh, we're at the high of the move here over the last 3 years. You look back in history, um, and what you'll see is that jobless claims, when they start to break out to the upside, and when that coincides with a rate cutting cycle, usually it's too late. We saw that in 2000 down here. We saw that in 2007 leading into 2008. And I don't know if we're seeing that now, but you're seeing that jobless claims number, just like I showed you before, at a multi-year high. And my takeaway yesterday was that they are in fact going for maybe like a mini rate cutting cycle for now. So those two things are in line, and it's a little disturbing, I would say.
Well, look at the 10-year reaction. We're almost back to 410, and uh, literally rates are like 3 and 3/4, right? And it's lower than what I would consider a neutral rate. It's lower. It's just we've been drunk for years on low interest rates, years and years and years. Okay. And we had global crises that took interest rates down to zero. So that's why we went to zero. We stayed at zero way too long, obviously, as you um, know by the nickname, always too late, pal. He stayed there way too long after the Fed gave free money during COVID. And then he moved rates and he had to move them up so fast to such a high relative level. Think about the shock that the system had to take from zero interest rates. And there were a lot of blowups by a lot of firms, in the credit space that have been hidden for years, but people were loaning on the long end at like 2.5%. And then those rates went to 5.25 on Fed funds. That blew people out. So what happened is the patient needed massive saving. They saved his life, the market. Okay. Then they stayed too long. They gave the guy so much morphine, he didn't know what he was doing. Okay. And he was on morphine for years. And then they literally took the guy off morphine without like weaning him off the drug, blew rates up, blew people out of town. And people went from a place where they were literally having what I would call free money, free rates, to to where we are now, which is lower than normal, but a little higher than where they should be. But in the real world, interest rates should never be zero. They should never be one. They should never be two. Okay. Why should someone lend you money at 1 or 2% for 10 years? You should borrow as much money as you can. So I think the market is very confused. Um, I'm very surprised I'm not surprised, but I'm a little surprised that the bond market has had a negative reaction, and maybe the trade here is to short the long end, because there's going to be supply coming on the market. Tariffs aren't solving the problem, as you know. And yeah, I'm not convinced, and I don't know if you got anything out of your dot plot or out of what he said, that he's cutting next month. It just didn't feel like that was the flavor of that meeting. Okay. The flavor of that meeting was, hey, listen, we'll give you one. We're going to start a process, but this process is going to be long and slow, and it's going to take a lot of time. That's what I saw. But I don't know if you saw it any differently. I don't know if the dot plot, or maybe pull up Fed fund futures. You can see what the Fed is planning for next month with the odds. Like yesterday, we did the podcast. You came on the air. You said that there was a 10% chance that the Fed was going to do 50 basis points, but way before that meeting, that went down to like 2%. So I guess the mole in the meeting was selling Fed fund futures or whatever, because they knew. But no, I was wondering, it would be interesting to really look at what the odds are of an October cut, because
88% as we speak.
that's unbelievable. So what that means to me is actually kind of like what you touched on a minute ago with claims. It means to me that the data is going to show really, really true weakness. Okay. Or that's what they're expecting. Because if the jobs don't print a negative number next month, I would be very surprised if they cut rates. Why would they cut rates if they're worried about jobs, but they're creating jobs? There's got to be a very big negative job creation number coming. What do they say, to a theater near you?
Well, he was citing a lot of the revisions as his major concern. So
Right.
I got from that meeting that they are going to cut. They're going to, now the data has to force them not to cut almost.
You really think so?
That's what I got.
I don't know. I didn't get it. I got a very confused guy, and I'm having flashbacks as a Dolphin fan to Mike McDaniel in a call not being coherent, and I literally thought the guy actually yesterday was off his game. I actually thought he was off his game yesterday, which is even more scary than anything else. I didn't think he was on his game. I think he was very he was he was avoiding questions left and right. Um, you know, and I thought it was you know
So you touched upon the quad witching dynamic here, right? As soon as the market closed yesterday, futures opened up 6 o'clock, straight up on air.
they actually they did move then, but they also moved post close, like right from 4 to 4:15. You
Yeah.
know, they're trading till 5. They were ripping, which is strange. And I think the market is listen. I think the market's way ahead of itself. That's just my opinion. I've been saying it a while. I think this may be the culmination with this quad witching. Um, but
Right. So you were discussing how you were thinking about it. I thought it was interesting because so far it's playing out. Um, you basically are saying that it's we talked last night, like they're gonna jam this market up tomorrow,
I
and then
don't. No, no, not necessarily. Not necessarily. The high could already be in. It's just they will keep it. around this level or print the highs. And a lot of times people don't understand this trade, and it's a trade you should not do. But there's a big trade that we do in futures where we buy September and sell December. And we call it like the jam. So they jam up the stocks on the opening to a crazy cash price. They did it last month as well. That's really what I'm talking about, is the difference between that futures roll. That roll is what I look at. So we keep an eye on that futures roll, and we can kind of trade that. But in the equity market, there's not a lot. But I'm looking at the futures. They're actually $17 off the high of the day, and they're still up $45. I mean, maybe today we get some trading. Maybe we get some trading today. I don't know. And where's the straddle? I would assume the straddle's got to be 35 today. That's my guess.
Checking it out. Let's see.
Vol came in yesterday pretty big, by the way.
It said 28.
28. So it's better than it's been, but it's lighter than where I thought. So, but 28, means there's going to be some movement. I, I think there's a lot of stuff to do out there. So, we'll be at it.
You mentioned you were surprised by interest rates. It's not the first time where everyone's expecting rate cuts, and on the day of the Fed, interest rates actually go up, and that we had that yesterday. Rates up slightly today.
Well, I think rates went up, to be honest with you, for what I said before. I mean, you're saying there's such clarity for the next meeting. I felt, honestly, that there was no clarity. I literally walked out of there. I wasn't walking anywhere. I was in my office, but when he walked out of there, I was like, this makes no sense to me. I don't even understand it. And like you said, maybe they're having rate cuts. So this is truly not a full cycle. It can't be. So it's not a full cycle. People are, sort of have their hands up in the air, not knowing what is going on here. And I'm surprised that it has that kind of certainty for next month. Because you know what? I'm going to actually find a way for our customers and subscribers to have the ability to maybe make money on the fact that that may not happen. And like you said, if it's 80%, that's a really good odds trade for us. You only have a chance to lose 20 and make 80. It's a 1 in 4. That's a really good trade. So I like that trade. So I'm going to look at that. Um, Oil is somehow up again. It was down overnight, up again. Gold was smoked last night and
Came
basically
right back, right back.
came back, but it's still way, fairly off the high. I do think there's going to be some trading today. So keep your eyes up.
It's
You know,
interesting about gold, actually. Gold, you talk about interest rate sensitive parts of the market yesterday. Gold, silver, home builders, bonds, you name it, anything like that was reacting like they were, you know, raising rates, not lowering rates. So it was weird. Like the interest rate sensitive stuff wasn't doing well yesterday. Obviously today everything is up, but yesterday it was kind of interesting to look at those specific areas: home builders, gold. Again, anything interest rate sensitive wasn't really doing that well yesterday.
no. Well, listen, rates backed up. They're now backing up even more. They're at 409. Slightly lower bond prices on the day and slightly higher yield. But the question is the next move? It's funny. I've been, and this and anyone watching the show, I've been kind of a bond bull, through this whole thing down from 435. And I'm actually thinking the trade is to short them. That's the trade I kind of like. So, I think that we could try to potentially do that. That may be a nice trade out there. So we may look to put on a long TLT put position. Um, we may get a quick strike move back up to 4.25. I don't think, it's funny, like you're saying he has bullets. I don't see the guy with any bullets. I see no bullets here at all. Zero. I know you're saying they're cutting. I and then the thing is, we discussed yesterday, which I got a little passionate about, is if he's going to do 50 in two meetings, why doesn't he just do 50, 50 in one meeting, get this party going, and then see where we're at? But he's not that guy. This Fed is so. Besides the fact that Trump is browbeating this whole Fed into oblivion, this Fed is broken, dude. They're literally broken. I mean, they are broken. They are misguided and broken. I maybe I'm wrong. That's what I see. They can't make a full decision. Everyone in the committee is in different ways. Okay, one person dissents, wants a 50. This one says that. I mean, you never usually see that out of the Fed. So I'm really concerned. And then the better question is who's going to be the next Fed chairman? And I think I got the answer. You're gonna love this answer. Who are you putting for the next Fed chairman? Who do you think it's going to be?
Maybe Waller.
That is a decent bet. I don't think so. I think it's someone coming from the outside that's actually not in the Fed right now. I don't.
Oh, that'd be good. That'd be great, actually.
You know who I think it'll be? Donald Trump.
No way.
I'm
Junior.
only
Junior. No, you
I'm
meant
joking, but how funny would that be? He gets up and he goes, "Listen, there's only one guy that can do this job and take rates to below zero, and it's me." I don't know why I want. Wait, I don't know why I want rates at zero, but I know I'm in real estate, and I know when rates are zero, I can borrow really cheap and not pay back the loan. So anyway, I think actually the Fed governor is going to come from the outside. It's not going to be someone that's existing right now in the Fed. I do not think. I think he is so angry with the Fed that it's beyond belief. And none of these people could step up to Powell. So why would he want someone that couldn't step up to Powell? That's what I say. None of these people have stepped up to Powell. Um, so I think
you mentioned real estate. There's a term. I don't know if you ever worked on any kind of like real estate, private equity stuff, but they have a term called deal fatigue. It's when you're working on a deal for a long time and it's not working out, and you get a little like edgy and frustrated about it. I feel like this entire month, like I've been looking for seasonality. I've been looking for that trade, that pullback, and it's like 3 weeks into it, and yeah, I'm going through a little deal fatigue here.
mm,
How do you handle that? How do you handle? I'm curious to know how you handle it from a trading point of view, where you're like two,
well,
3 weeks into an idea, and you still see the setup, but it's just not. It's not there. It's not there. And now you
I
have the spot witching thing, and you're like, holy shit, there's another setup. I
uh,
shouldn't.
usually
Yeah,
usually I break things. I don't do that anymore, but I usually break things. So it so nothing has been broken in my office. The one nice thing about what I do that is different, I think, in a way than what you're doing is I have defined risk. So like today, I'm slightly short, okay, which I could basically hedge that out and probably make money today, okay? But I have defined risk. Every trade is capped. So like on a $50 S&P move, my cap comes in at like $25, so I'm capped out. And then I have the guy behind me, selling put spreads against the short call spreads, and we try to bring in enough money to save the day, or get close to saving the day. So, you know, That the interesting thing though is like S&P could be. I don't know why the S&P. I do know why because it's quad witching, but I'm surprised we've had such a reaction to what I believe is very negative. I'm just telling you, I thought the Fed, we were short some downside put spreads yesterday and we got lucky. They were in the money, they went out of the money and they cashed out. But I felt kind of lucky because I thought everything was bad yesterday. And that's the
But
better question.
for the normal person that's watching this, right? You got to explain that why everything is negative when they're cutting rates. Doesn't the market want lower rates?
They're not getting lower rate. Dude, did rates go up or down yesterday?
They went up. They went up.
Okay, so they didn't get lower rates. So that answers your question number one. The Fed funds targeted rate is a rate that basically no one even uses. The only rate people are really using, listen, bank to bank is different, and there are different, lenders, across the board that are affected. But really, for me, you, and touchdown T behind us, the only thing we care about is where we can borrow money, okay, to buy a house, to buy a car, to, do all of that stuff. And actually those rates went up yesterday, even though Fed funds went down. So did it really help anybody? I don't believe that it has. So you
Well,
know,
the national average of the 30-year mortgage rate, last reading I see, 6.4%. Uh, the data is not updated for yesterday. I'd be very curious to see where those mortgage rates are over the next couple of days. And I don't know. To me, I feel like there's three pieces of the economy here, and it's like you have the consumer, which is your jobs, your spending, all that stuff. And that, like I showed before, that's weakening, right? You have real estate, which is pretty much in a recession. And then you have this like AI, which is like an overlord over the stock market. So the stock market's not really showing what maybe the consumer and real estate is showing. So these rate cuts are supposed to target that. And do you think it's going to be effective? Do you think
do I?
these rate cuts are actually going to, get the trend going in the opposite way in jobs? Do you think these rate cuts are going to open the door for refinancing of mortgages, have buyers meet sellers in the real estate market, get employers to start hiring again? Like, I don't, I don't know. Throughout history, it's like a rate cutting cycle coinciding with weak jobs is not. It's like too late. You know.
I'm calling a time. Okay. It is way, way too early to call this a rate cutting cycle. This is the first cut of a very confused man, okay, who is basically in a really, really bad place. That's what I would say. Really bad place. He he is, I would say, utterly confused. That's just my opinion. I'm one guy. You know,
But you got to assume they're going to go forward with more cuts. I mean, we've been assuming that they're not going to do this, and they come out and they're like, "Yeah, we are going to do it," because they're focused on the jobs numbers.
but we haven't seen, dude. Listen, we're getting through this thing. I'm mellow. We haven't seen one jobs number. What jobs number have you seen since the last fake number where they lost 1 million jobs and they still created 38,000 jobs when ADP was minus like 200 and then Jolts was the worst number in history. So they're still pulling off the fraud for a while. Okay. I think if they print a negative jobs number, the stock market is in a heap of trouble. Okay, and listen, we're at three, basically three and a half, 3 3/4. Where can the Fed actually go? Where are they going, dude? Tell me where they're going. Honestly, where are they going?
It looks like they want to get into the mid threes.
Yeah, well, that's two more cuts. Big deal. What? Let me ask you a question. If rates are 3.75 for Fed funds, okay, versus 3.25, what is that doing to your life? Okay, and in that process, bond yields go from 4 to 4.5.
Yeah, in that scenario, I don't think that helps the areas of the market I talked about, like real estate, right? The mortgage rate's got to come down. So I'm looking at that to see whether these rate cuts are going to open the door.
Well, how about this? Since we've been on this podcast, something must be coming out because I'm seeing S&P drop in half of their gain. They've lost half their gain. It's pre-open at 9 o'clock. There must have been a number at 9. What is it? There's something. I don't see it, but bond yields are now almost 4.11. They just backed up massively. So what is going on? I mean,
Not,
the,
I don't think
well,
they come out, but we did have the. I mean, I don't know if the jobless claims number had any effect.
no. We didn't move off that. We didn't move
No.
off that.
Well, listen, the Nasdaq was up a full sigma move on air overnight,
Dude,
and it's
it was up more than that. The Nasdaq was up. The Nasdaq just sold off. It's actually holding up better than the S&P, but the Nasdaq just sold off for all intents and purpose. These bonds are getting whacked, dude. Um, the high in the Nasdaq future, it's off my screen. I'm trying to find it. Was 20. The number is so big I can't even say it. 24,762, and we're 24,006. 680. So we're 100 off the high in Nasdaq, and S&P is 30. Dude, S&P is only up 33 on the day after being up 65 on the day, I believe. So the move is in half. The truth is, we're on this podcast at 9 o'clock, and we both are saying we don't even understand why the market's up. Like, I don't see why it's up. You know, I
I'm
don't see
looking at
it.
call spreads at 66.75. They're at 470. I think I'm going to do that one. I'm going to go for the 66.75 85 call spread right here.
Yeah.
Yeah.
Yeah. I don't know what I'm going for yet. I don't know.
Well, don't think too long because I don't know. The way that this move here in the Nasdaq looks like it's going to force
Maybe,
people
maybe,
to show what they're made
maybe, you know what? Maybe I found it. So David Tepper, who's a large investor, um, hedge fund manager, moves markets, basically says the Fed could cut a few more times, but easing too much will cause the market to enter a danger territory. I think I listen. That's
Come
kind
on,
of
bro. That moved the market. Come on, dude.
why do you say come on? He a
David,
hundred
your
percent
comment.
moves. David
How,
Tepper
how
moved.
can my comment move the market or your comment?
David Tepper moves the market. That's why he's on CNBC. He can move the market.
Dude, half the people that are trading stocks these days don't even know who David Tepper is.
Everybody knows who he is. Dude,
Okay.
okay, wait, you think people are trading and not watching CNBC or Bloomberg? They're sitting there watching
You
cartoons.
are, and people in your demographic are the people in their parents' basement betting their entire life savings to make 300% returns in one day don't know who David Tepper is.
Hmm. I don't know.
Dude, if you don't know, who knows?
You. I'm leaving it to you. I'm
I don't
leaving
know.
it to you.
I just put on that spread. Dude, I was looking at it was at 150. Um, Now all I got was $1.25. That's not cool. Not cool.
Really?
Yeah, really. The freaking thing is moving.
I
Hell
just
is
thought it was funny. I want to take a look at Nvidia quickly because Nvidia somehow rallied $5. the stock was the worst acting stock on the board. It's still up 460. Like, why is it up? Because they
What's
made
the
an
with
investment
Nvidia?
in
That
Intel?
China news was just nasty for
I
Nvidia.
think so.
I don't I don't get it. You know what's interesting? The Chinese AI, like you look at Tencent, China in general, just ripping. It's up 40% from the lows in general from April. But you look at like Tencent is up 120% from the lows this year. And since August, Tencent is up 30%, while Nvidia has actually been down 5.5% since August. So I don't know. Is China winning the AI race here, or like what's going on?
I don't know. I don't know who's winning what, dude. I can't honestly figure it out. I'm leaving it I'm leaving it to you. I do think China's winning the AI race, but I'm telling you, it's beautiful that we're kind of doing this podcast right this second, because the bottom line is bonds are falling out of bed, man. I
Yeah, they
mean,
are.
falling out of bed like it's a number that came out, you know? It's very
Yes.
strange. Very strange. Very, very strange.
Again, I thought yesterday was very strange because a lot of the interest rate sensitive stuff was not doing well,
Mhm.
and today there seems to be some follow through in that.
Yeah.
Wow, S&P's like almost
Well, I'll
almost.
say this, S&P right now is lower than the reopen, which is shocking. But somehow Nasdaq's still up 200. I don't know how, but it's still now it's up 180, falling. But I don't know how it's up 200, but it is. Um, it's uh, it's a wild tape. I think today could be wild potentially. You know, potentially. Um, Market bounced a little as we're on the air, so the panic is over. Just everyone, hold on, relax. It's okay. We do go up every day. It's anyway. Oil's interesting. Oil was rallying, I guess, because the stock market was rallying, and now the market's not rallying, and oil is coming in a bit. Not doing much there. Kind of unchanged on the day. Gold, flipped a little bit negative. I think the futures are down more because it sold off after the close, but um, overall, markets are, you know, they're holding at right now at these levels, so we'll see. Um, but really looking at the ten-year, I mean, what do you do here? I mean, do you take a stab at, like, listen, if you buy 10 years at 412, 413, can they back up to 420? The stock market cannot hold up. Cannot. There are things that cannot happen, and the stock market holding up cannot happen. So that's what I see with that. Um, but I think it's going to be interesting action today. Keep an eye on the bond
It's
market.
already. That's not a big. It's already interesting, actually.
It's interesting, but
It
we
hasn't
haven't.
been good.
Like, what if the S&P goes negative after being up 50? I mean, that's a pretty bold statement.
Yeah, I think a lot of people are fixated on the initial reaction to these Fed meetings and to any of these economic reports. So they see, okay, the market is up after a Fed meeting, and it doesn't matter if it's up a little or a lot, it's up. Okay, we're good. Let's continue as we were. But the real reaction takes a little while. It takes like 72-hour period, and then you see what the real reaction to these events are. So I don't think the book has been written on yesterday's Fed meeting yet.
Well, the book is
Sorry to get
written.
that talk
The
with you.
book has been written in everything but S&Ps. Basically bond backed up. Rates are actually ticking higher. Currency caught a bid. Larry got stopped out. That's me at the worst level in euro. Um, So I'm out of that. It's kind of depressing, but 411.4 on this is extremely interesting. You know what I
I
was
wanted short bonds, but they're already down. Like, trade location matters. I don't want to just hit it here.
sure. You know what
You
I
know,
would say? You know what I would say is interesting? Like it's funny and it equates me into what's changed in the game. And what's changed in the game, meaning the market, is the advent of options. And it's funny in the newsletter business, in the business, that I'm in, like it's funny, all of the copywriters that write copy are like old school. They don't even understand, and they go, options are scary and they're so complex, and it's almost the opposite. They're really, really easy. They're easy to execute. And it's funny, I was actually thinking in my head, if the bond backed up more, maybe I would buy some bonds for a trade, buy TLT for a trade. And then I'm thinking, how much TLT can I buy, with a $20 million entity, okay, versus once the options open at 9:30, I buy an in the money option that trades at what we call parity, which is the exact price of the
right.
stock. And I can control 250,000 shares easily. You know what I'm saying? Easily with you know, a 2,500 lot, which is big, but not that big. So, like, I'm sitting here and I was going to turn to Thomas and say, hey, when this hits this level, I want to buy, but I'm just going to wait for the opening in 15 minutes and I'm going to be able to buy so much more size. And that's what's different about the market. Options are the best way to play it. And option volumes are bigger relatively than stock volumes by far. It's unbelievable what's happening. But it just popped into my mind when I was going to do this trade. And I'm like, why tie up $5 million in capital when I can tie up basically $400,000 or less to control the same position? So, doing the same exact thing and having limited losses. So I just think, I'm an option guy. I think options are great. I think it's the best thing to trade. That's what everyone's doing. Option volumes are exploding. So anyway, that popped in my head. It was like kind of
So,
like a
that's an interesting point. Let me ask you a question. You're from the pits, right? In the option pits. You understand market making. So, is it true that every time somebody buys an option, buys a call option, that the market maker buys exactly 100 shares, even if it's deep out of the money calls, right? Do they
no.
have to? No.
No, they're buying. There's something called delta with the
Right.
option.
So can you
So,
add a little
so
bit?
the delta is basically the amount. So let's say an option is right at the money, and there's a certain amount of time left. That delta would be like a 50 delta, and as the stock goes more in the money, the delta picks up, and when that delta, when it's a 50 delta, it moves half the stock. So let's say you had a 50 delta
Then do they buy
option.
50 shares, even if it's deep out of the money?
Yeah. Oh yeah. Well,
Or do they have
that's what
discretion?
happened. Let me explain to you. That's what happened in GameStop. So the whole GameStop fiasco was guys like Roaring Kitty buying 50-cent options, like lotto tickets. All of a sudden, the delta on that is zero. It's like 5 delta. You're not really hedging a 5 delta, because you buy 5 shares per 100 shares. It's not really, something that you would hedge. All of a sudden, the stock was up $250 and that delta went from 2 to 70. Now you need to buy 70% of the full stock. And then it went in the money by $25 and you're at a 90 delta. You need stock 101. So, yes, um, by using deltas, okay, it gives you the implied moves. Okay. So, like if I have a 50 delta option that might tick up, if the stock moves up $2 to a 60, I'm getting a $1.10 move on a $2 move. So I'm getting half the move. So a 50 delta gives you half the move. 25 delta gives you a quarter of the move. And 100 delta, which in this case in bonds I would buy, would give me a 1-to-1 move no matter what. But with defined risk, if I pay $2 for that option, that's the most I could lose. I'm not losing $88 like I would if I bought DLT, if I was wrong. So using options is great. Understanding deltas is very, and the Greeks in general is very, very important. So the delta's there, and then there's something called gamma, and the gamma changes the delta as the option moves. So we have all of those things involved. But if you're with me at the Opportunistic Trader, we're doing all that work for you. We're picking, we got Touchdown behind me, we got you, we got other analysts, Clint. You know, we're picking options that we believe are priced right with scenarios that make sense, and we have the ability to make money like that. So
No, no,
you
no.
know,
Nothing makes sense to me over the last 3 weeks. I'm thoroughly confused,
well,
and Powell is confused. Everyone's confused.
Well, I think today what you're going to see, believe it or not, is I think the Dow could be down. How do you like that? That's how crazy this is. If the Nasdaq's up a lot, the Dow will be down. So keep an eye on the Dow underperformance of Russell. If the S&P and Nasdaq continue to rally, if that sells off, they'll run to that. So listen, that is confusing to me. That's the most confusing thing about the market, being old like me, being old school, not understanding. Listen, we had a formula. I was talking to my buddy who trades with me for years. We used to have a formula, and we would calculate every 7 points in the Dow was one S&P point, and it always worked. Okay, so if the S&P was up 2 points, the Dow would be up 14, plus or minus like very little. Now that's thrown out the window, and it's almost the opposite. So these young bucks like you are in there jamming around markets, fooling people, trying to create scenarios. I'm telling you, that's what this is. This is like a poker game, and things that you think are obvious. Like when I was trading, I would look at certain clues for the flavor of the week or the month. And, if the yen was moving, maybe it moved to SPOOs, bonds, whatever. None of that matters. You know that. You know that. You've seen it. Gold, we talk about gold all the time on this show. Gold is up or down, usually up no matter what. So if bonds are weak, gold is up. If bonds are strong, gold is up. If equities are weak, gold is up. If equities are strong, gold
Called,
is up.
called
And then and
asymmetric upside risk. Gold
no,
has
but
a
then but Eric, then what happens is everybody gets fooled, okay, into, like, you're looking at it, you're like, gold should be falling because this, and this, and then you sell it, and then as soon as one thing upticks, you're back in business, So I honestly, I don't know. I don't know. I mean, the Nasdaq being up 200 pre-open with nothing going on is insane. It's
What do you
just
mean? Nvidia is investing into Intel.
ooh, that's gonna make up for no China sales for sure. Definitely. That's
And
gonna
then
make up.
here's the funny thing: the market's doing it again, where they're buying one thing, selling another. So they bring up Intel 30%, and then they drop AMD 5%.
I mean, I have a better question, and then we're gonna have to go because we're 10 minutes before the opening, and we had a nice chat today. But my question is, Intel is the most under advanced piece of junk that has missed the last 20 years of everything. Okay. Now they're getting investment. Isn't isn't Nvidia a direct competitor of Intel in some manner? They both make chips. I don't get it. Hey, why doesn't the government, like, the government's like, listen, we took a stake. Why don't we get 5 or 7 other companies to take a stake, and we'll try to save this piece of junk? Like, I don't understand. How is this good for Nvidia? What are they gonna make? I mean, come on. I mean, they're they're the behemoth in the space. It's very, you don't find this to be very strange? Like,
Very
aren't they in the, I'm asking, aren't they in the same space?
yes.
Okay, so then why are they able to make a freaking investment in a competitor? And what is a 5% investment going to do for them? It's going to blow their stock up $300 billion. I mean, come
Why are
on.
you asking questions? The market doesn't.
Well,
They
I'm
don't have.
not. I'm asking a
They
rhetorical
buy
question.
first. They'll ask these
I
questions
know
much.
you don't have the answer, but I am asking the question.
I don't know.
I'm asking the question, but I know you don't have the answer. But I'm just, I'm mystified at the movement in all of this stuff where, we're harping a little on Nvidia today, but like Nvidia was down yesterday, was terrible. Okay. The news is very crystal clear. Okay. They're being sued by the Chinese government. Okay. Forget that they're going to buy chips from us or them. Okay. They're probing them and suing them. Okay. That's not a good position to be in. And they're doing that while Besson is flying all over the world to try to meet Chinese leaders. That doesn't make you feel a little uncomfortable? I don't know. Nothing will. No matter what happens, nothing will. But, the market has ignored pretty much all negative news. They only kind of look at positive news. So we'll see what happens today. I think we gave everybody clear, concise thought process. And, we'll see, we'll see how everything goes. And I would say this, it's very funny. I've watched this on the opening the last pretty much month or a little less than a month. Every opening, the market will be at a price, and all of a sudden, like, do you have the futures on a wheel? Like, I don't know how you have your futures, but I don't know if you're just looking at it at a direct quote or if it's on an option futures wheel where you see the best 20 bids and offers on both sides. So anyway, I have my stuff on what we call a wheel. Okay, so I see up and down, you know, 20 20 increments on both sides. As soon as the market opens at 9:30, it goes like this. It just lifts up. It's like the craziest thing. It's like relentless buying computer on the opening. So we'll see if that happens today. But we're 8 minutes out. I want to give everybody a chance to get ready for the opening. I hope you guys enjoyed the podcast today. Um, I would say if you're trading, put the bond market 10-year yield on the side of your screen, 411.40. If that backs up into the 412, 413 level, that's going to cause a huge issue. That's way away from 4%. We ticked under 4% for a minute, and now it's going the other way. So keep that on your screen. And that's the important thing to look at today. I don't know if you want to close with anything, but I am fully, as you would say, what'd you say, cooked? I'm fully cooked. So I wish everybody a great day trading, and we'll be back. Actually, we'll not be back tomorrow. Eric has the day off, but that is my Ask Me Anything show, where you guys can write into feedback at theopportunistictrader.com, and I will answer all your market questions, and we will do our weekly recap of our trades and market action. So I wish everybody a great day and good luck.